Hello, everyone, and welcome back to IvanVentures, the podcast where we, break down money, investing, and business so it actually makes sense. And guess what? Mela is back. After taking a well-deserved break in the last episode, she's here with me again today. Welcome back, Mela.
Oh, thanks, Ivan. I really did miss being here, actually. I'm just so excited for today's topic, though, because, it's something that just affects almost everyone who has a job, right? I mean, retirement savings, and specifically the 401k.
That's totally right. We're talking about, what a 401k is, the different types, the companies that manage them, and, the really big changes happening right now, including things like, crypto and private equity being added to retirement accounts. So yeah, if you've ever looked at your paycheck and thought, what's this 401k thing? This episode is definitely for you. So let's just dive right in, shall we? What exactly is a 401k?
Yeah, let's do it. So basically, it's a retirement savings account that, you typically get through your job. You put money in from your paycheck, before you even see it, before you spend it. And then that money, it just kind of grows over time, which is a really big deal.
It is. And the cool part, or the really, really cool part, is that many employers actually match your contributions. So if you put in $100, your boss might put in another 50 or even another 100. And I mean, that's free money toward your future, Mela. Who doesn't love free money?
Oh, for sure. Absolutely. I mean, it's like you're getting paid to save. It's awesome.
Exactly. Now, there are two main types that people usually hear about, right? There's the traditional 401k where, money goes in before taxes and then you pay taxes when you take it out later in retirement. And then there's the Roth 401k, which is like the opposite, right? You pay taxes now, but then those later withdrawals in retirement are completely tax-free.
So really, it's just about whether you want your tax break, right now, or if you want it later when you pull it out in retirement, which is a big decision for a lot of people.
Yeah, it really is. And, speaking of the 401k, here's a fun fact actually about it. The 401k wasn't even created until 1978, and it was almost like by accident.
Oh, no way.
Yeah, a benefits consultant just happened to notice a section of the tax code, section 401k, and they realized it could actually be used for retirement savings. Before that, most people, believe it or not, relied only on pensions.
Wow. That is actually really interesting. I had no idea it was an accidental discovery. It makes me wonder what other tax code sections are out there that we're missing, you know?
Right? What else are we missing? It's kind of crazy, isn't it? So, diving into how much you can actually put into these things, it's pretty important, right? For 2025, just to give everyone an idea, you can put in up to $23,500 a year.
Oh, wow, that's a good chunk of change.
It is. It really is. And, if you're 50 or older, there's a little extra you can throw in there, like a catch-up contribution. That's another $7,500. So that really adds up, especially if you're getting closer to retirement age.
Yeah, definitely. So it's good for people who, maybe started a little bit later, or they're just trying to supercharge their savings as they get closer to retirement age. That's really helpful.
Exactly. And, even if you can't max it out, which let's be honest, not everyone can, it's really, really crucial to at least contribute enough to get your full employer match. I mean, Mela, we just talked about it, right? It's free money. You do not want to leave free money on the table. Why would you do that?
No, you absolutely shouldn't. And I mean, the sooner you start, honestly, the better, right? Because, thanks to compounding, even small amounts of money can grow into really big amounts over, decades. It's kind of wild how it works.
It is. It is wild.
Here's a fun fact actually about compounding. If a 25-year-old, for example, just puts in $200 a month, that's it. By age 65, they could actually have over $500,000. And that's assuming average market returns. That's the magic of compounding, It's kind of mind-blowing if you think about it.
No, it totally is. And $200 a month for most people is, pretty achievable. That's not, an insane amount of money.
It's definitely doable for a lot of people. Yeah.
And the fact that it can turn into $500,000 just by doing that consistently, it's something that I think blows a lot of people's minds. It's not about timing the market; it's about time in the market. That's what they say. So, besides just the regular 401ks, there are actually quite a few variations out there. For different situations, different business sizes, that kind of thing.
Oh, like what kind of variations are we talking about here?
Well, for example, there's the Safe Harbor 401k. That's really designed to help smaller businesses, treat their employees fairly, especially with contributions. Then you've got the Simple 401k, which, as the name implies, is usually a bit easier for small businesses to set up.
Ah, so like for a business owner who maybe doesn't have a huge HR department to handle all the complex stuff.
Exactly, exactly. And for all you entrepreneurs and self-employed folks out there, there's actually a solo 401k. So yeah, that's specifically for just one person or maybe you and your spouse if you're working together.
Oh, that's really good to know. I feel like a lot of independent contractors or freelancers might not even realize that's an option for them.
Yeah, it's a huge one. And then there's also pooled employer plans or PEPs, as they call them. That's where smaller companies can actually join forces, to share costs and get better benefits for their employees.
That makes a lot of sense. So they don't have to carry the whole load by themselves.
Right. It kind of democratizes it a little bit. And, beyond just the 401k family, there are also other retirement vehicles, obviously. Like you've got your IRAs, you've got SEP IRAs, there's 403Bs, which are specifically for teachers and people who work at nonprofits. And of course, the old school traditional pensions are still around for some folks.
So essentially, it sounds like no matter what your job situation is or, how your employment is structured, there's probably a retirement plan out there that like fits your specific needs. That's actually pretty reassuring.
Yeah, it really is. It really is. I mean, that being said, here's a bit of a surprising stat, actually. Only about 60% of American workers actually have access to a 401k.
Oh, wow, that's actually way lower than I would have thought.
Yeah, I know, right? It means like millions of people still don't, which is why, you've seen this push for state-sponsored retirement plans like Cal Savers in California, to try and make sure more people have access to something. All right, so moving on to something really big that's changing in 2025 for 401ks. This is pretty significant.
Oh, really? Like what kind of big change are we talking about now?
So in August 2025, there's the new executive order that, it changed the rules for 401ks. For the very first time, retirement plans can officially include, get this, alternative investments.
Alternative investments. Hmm. What what exactly does that like mean?
Yeah, I know, right? It means things like private equity, which is basically ownership in private companies that aren't traded on the stock market. Also, private credit. So, lending money to businesses outside of traditional banks.
Oh, so like not just, stocks and bonds.
Exactly. And it also includes things like real estate funds. So, commercial properties, infrastructure, that kind of stuff. And you ready for this? Even cryptocurrency. Yeah, we're talking Bitcoin and Ethereum possibly making their way into your 401k.
Wow. That's a huge shift. I mean, until now, 401ks were like pretty much just limited to mutual funds and index funds, right?
Precisely. This is a massive deal.
So just to make sure I'm understanding this, basically investments that used to be like reserved for, super wealthy people and big institutions could now be available to like everyday workers.
You got it, Mela. That's exactly what's happening. Supporters of this move, they say it gives people a chance to like really diversify their portfolios, possibly earn higher returns, and not just be tied to the ups and downs of the public stock market.
Okay, that sounds promising, but I have a feeling there's a but coming.
Oh, there's definitely a but. There are definitely some risks to consider. For example, fees. Index funds, they usually cost like, I don't know, maybe a 0.26% in fees. Private equity, on the other hand, can be 1 to 2% plus a profit share. So much, much higher.
Oh, that's a big jump.
Huge jump. Then there's liquidity. With stocks, you can sell them, pretty much anytime. These alternatives, though, they might lock up your money for years. Like you can't just pull it out when you want to.
So not as easy to access your money if you need it.
Not at all. And then valuation. It's pretty easy to price like Apple stock, right? It trades every day, but it's much, much harder to accurately value like a small private company or like a real estate deal that doesn't have a constant market price.
That makes sense. It's like less transparent.
Exactly. And then, volatility. And crypto, well, it's crypto. It can soar and crash in the same year. So definitely something to be aware of.
Yeah, I think everyone's pretty familiar with that roller coaster.
Yeah, for sure. But providers like Empower, for example, they're already preparing to add these options to their plans. But usually they'll only be like 5 to 20% of your overall portfolio. So it's not like your entire 401k will suddenly be in, crypto.
So I guess more options could potentially mean more growth, but also like maybe more ways to mess up if people don't, fully understand what they're buying.
Exactly. Think of it like a buffet. New dishes are on the table. They might taste amazing, but if you overload your plate without knowing what's spicy, you might regret it later.
That's a good analogy.
And speaking of the scale of things, here's a mind-blowing stat for you, Mela. US retirement accounts, all of them combined, hold over $12 trillion.
Wow. That's that's an insane number.
I know, right? So opening these accounts to alternatives could really send a flood of money into private markets, really reshaping investing, far beyond just retirement. It's huge. So now that we've talked about, what 401ks are and all these new alternative investments, let's talk about the companies behind your account, the ones actually managing your money. We call them custodians and record keepers.
Oh, so like the back office, so to speak, the ones who actually hold the assets?
Yeah, exactly. They're the ones who handle all the paperwork and make sure your money is where it's supposed to be. And there are some really big names in this space. Companies like Fidelity, Vanguard, Schwab, Empower, and Voya. Fidelity, for instance, they're huge. They have like tons and tons of investment choices.
Yeah, I've definitely heard of them.
And then you have Vanguard, famous for their ultra low cost index funds. They're like a go to for many people. And then Schwab, they kind of offer a balanced approach with strong service and a good suite of tools for investors.
Okay, so each one kind of has its own like flavor.
Exactly. And then, companies like Empower and John Hancock, they often bundle retirement with like insurance products. So they have a slightly different approach. But, ultimately, your employer's choice of provider, it really affects your fees and the investment menu that you have access to.
Yeah, and I think that's why, two people with the same salary could end up having totally different retirement outcomes just because of their provider. It's pretty wild.
It really is. And speaking of these big players, here's a little trivia break for you, Mela. Fidelity alone, just one of these companies, that administers over $2 trillion in 401k assets.
Wait, $2 trillion? That's bigger than like the GDP of most countries, isn't it?
It is. Yeah, it's absolutely massive. Just shows you how much money is tied up in these plans and how important these custodians are. So, with all these big changes we've been talking about, especially with like the alternative investments and everything, I think people might be wondering, hey, are we actually safe? Like, what protects us?
Yeah, that's a really good point. It's a lot of new stuff, and people get nervous about their money. So what are the guardrails in place?
Well, thankfully, there are things in place. First off, there's something called the retirement security rule, which is super important. It basically makes sure that financial advisors they have to act in your best interest. So they can't just sell you something that's good for them but bad for you.
Okay, so that's a big one right there. Like they're legally obligated to look out for you.
Exactly. And then there are also these new safe harbor rules that protect employers. So if your employer decides to add, say, some of these alternative investments like private equity or crypto, as long as they do it carefully and responsibly, they're protected. They're not like going to get in trouble.
Right. So it's not just like a free for all for them. They still have to like follow some guidelines.
That's right. So, there are definitely guardrails in place, but having said that, it's still super important for individuals, for us to stay informed.
Yeah, I mean, I think about it like driving, the seat belts and airbags are there and they're great, but you still like have to keep your eyes on the road. You can't just completely check out.
And that's your 401k crash course, what it is, how much you can like save, the different types, these like really big new changes we're seeing, and of course the companies that are running the show, the custodians. Now, before we wrap up, I actually want to share something a little personal. I actually didn't start my 401k until I was like in my early 30s. Back in my younger days, I mean, honestly, no one really talked to me about money or like finances at all. I didn't have a mentor or like a teacher guiding me on any of this stuff. But, little by little, I just started reading books and learning from some of the greatest minds in finance. People like Warren Buffett, Charlie Munger, Ray Dalio, and John Bogle. They kind of became my mentors, even if I, never actually met them, just through their writing and their lessons. And along with like watching videos and podcasts like this one, that's how I slowly started to, understand money and build better habits. So if you're listening right now and you feel like you've maybe started late or you don't really know enough, please don't beat yourself up. The most important thing is just to like start and just keep learning.
Yeah, that's such a great reminder, Ivan. It's never ever too late to just take charge of your financial future, no matter where you are.
Exactly. Save what you can, grab that employer match, watch your fees, and always just think long term. And hey, thanks for tuning in to IvanVentures and Mela. Glad to have you back.
Thanks, Ivan, and thanks to everyone for listening. Be sure to follow IvanVentures for more episodes where we make money and investing simple and, actually fun.